Another video is here, and thanks for coming to my channel, which is Leading Forex YouTube channel. And in today's video, which is another tutorial video, we will be talking about something very interesting. And this interesting thing I'm talking about has to do with some questions some of you have asked me on some of the videos you have watched. We always have that opportunity on this channel as traders. If you watch any video of mine and you have a question bothering you, you can always comment by writing that question at the comment section of the video, just like Iron Drino has done. And once you do that, I will take my time, read the question, and do a video on that. So just as Iron Drino has done, the same way you can also do. Even if you have a topic in mind, which in case you will want me to cover, you want me to explain, you will want me to teach you or do a video on that, you can also put that at the comment section, and then I will definitely come read them and then make sure I do a video to answer. So on any video, on my tutorial videos, you can put out your question and I'll see it. Once I read it, I will get back to you by doing a video and then getting your answer to you at the right time. So today is the time of Iron Drino's question. And I want us to listen to Iron Drino's question critically. He or she, I don't know whether he's he or she, so permit me to use any, okay? So whether I use he or she, please just permit me, all right? Now, he's saying that, thank you for answering my question, sir. That has to do with his previous question that I answered. So you can also ask anytime and I'll answer, because Drino has asked a question earlier, which I answered. So he says, thanks for answering my question, sir. My next questions are, question number one, given that different currency pairs vary in liquidity and volatility, what currency pairs will you recommend beginner traders trade? That's his question. Question number two, I have listened to a few traders say they trade just a single currency pair entirely. What's your view on that, especially for beginners? That's the second question. And his third question here says, you promised in one of your videos to do a video on how to place buy or sell limit orders, and buy or sell stop orders, but didn't. I will appreciate if you do that. Much love, sir. Regards. So this is Iron Drino's 3 questions. Now, his first question here, I must say, he has actually used the Forex language. And when it comes to Forex language, the terms he used here, liquidity and volatility, are Forex lingua. They are Forex terms. So what Drino is trying to say is that, with regards to his first question, is that, what will be my advice in terms of which currency pair to trade? Because the currency pairs have different volume in terms of trading volume or liquidity. When it comes to speed, the way they move, some pairs move faster than others, and some pair can move more in terms of pips than others. That has to do with the liquidity and volatility. That's what it simply means. Some pairs can move faster than others, and then some pairs can move more in terms of pips than others. So some pairs can move 50, 100 pips in a day. Others can move 20, 30 pips in a day. So that has to do with the liquidity and volatility. So he said, in as much as we are considering this as a factor, what will be my advice in terms of trading the currency pairs? Which of them would I advise that as a beginner you should trade? Should you trade every currency in the world, or what is my view? That is his first question. And then his second question will be a top-up question to the first question. He has watched other videos by other traders, and he's heard them say that they trade just one single currency pair. That is all they do, just one. So he wants to ask me, what is my view on that too? Is it good to trade just one currency pair or not? So the first question and second question will be one question. That's how I will take it. So I will make the first question and second question just one. And then the third question will be my second question. So his second question has to do with a promise I made on one of my videos. I think that is on the part 12. Those of you who have watched the part 12 of my tutorial videos, the part 12 talks about how to sell or buy in the forex market. So in that video, we only talked about market execution. So I promised that in order not to make that video too long, I was going to do pending orders. And then under pending orders, we have buy or sell limit, or we have buy or sell stop orders. So definitely I'll cover that in this video today. I will just finish that topic in this video today. But let me answer the very first and second question, which I said I will see it as one question. Now, to answer that question, I would like to take you to the MT4. Okay, so quickly, let's go to the MT4. Then I can show you something. Now, this is the MT4. And on the MT4, I want to say this. When it comes to currency pairs, okay, my answers are going to be two. Okay, I'm going to give two answers. All right. So the very first answer to Drino's question is that I will personally recommend that as a trader, you should trade the 8 major currency crosses. I repeat, you should trade the 8 major currencies, their crosses. I mean, their pairs. The pairs of the 8 major currencies. And what are the 8 major currencies? We have GBP, we have USD, we have Euro, we have AUD, we have NZD, we have CAD, we have CHF, and then we have JPY. These are 8 major currencies from 8 major world economies or countries. So GBP, we all know that's the Great Britain's pound. We have the USD, which is the dollar. We have the euro. We have the Australian dollar. We have the New Zealand dollar. We have the Canadian dollar. We have the Swiss franc. And then we have the Japanese yen. So these 8 currencies, they are crosses, they are pairs. When you pair them, you will get 28 currency pairs. When you pair just these 8 currencies, you will get in total 28 currency pairs. So when you watch my chart here, what you see here are the 28 currency pairs from just the 8 major currencies. Now, I'll explain why before I give you my second answer. So my first answer is trade the 8 major currencies, their crosses or their pairs. So when we calculate, you see 1, 2, 3. Okay, I want us to calculate that together to be sure that it's 28. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, we have 20, 21, 22, 23, 24, 25, 26, 27. I think we are left with one more pair. 27. Did I miss one? Anyway, when you do the calculation, well, to be 28 pairs. Maybe there is one of the pairs that I didn't bring. So let me just go straight and check if there's one pair that I forgot to bring. Because Forex, and the Forex, I think they are all here. 28, that is all. Forex 2, let me check. Euro 28, 28, 28. Yes, yes, yes. Yes, that's that. Yes, that's all. So I think in all it should be 28 and not 27, but that is that. It should be 28. Maybe my calculation wasn't right, but maybe when you do the calculation yourself, you get 28 of the pairs. So the 8 major currencies, their crosses will be 28 pairs. So you can trade the 28 currency pairs, okay? The reason is that these 28 currency pairs, because they are coming from the 8 major economies or countries, their volatility or liquidity is very high. And so when you trade them, you are sure to make profit, or you are sure to get the profit. But that notwithstanding, you can also trade the exotic pairs, which are also other crosses that are not from these 8 major currency pairs, but from emerging economies. We have some emerging economies like the South African ZAR, which is the ZAR, the peso, the Ria, and so many other currencies. Those are the exotic pairs. You can trade them too. But I would recommend that for now, you should trade just the 28 currency pairs from the 8 major currencies. This will be my recommendation. In the near future, if you want, you can add gold, and then you can add US oil or Weto oil, which is the WTI oil, which is oil. You can add the crude oil to it. Then also maybe which one? I think that is it. If you want any indices, maybe S&P 500 and then the Dow Jones and the rest. But when it comes to currency pairs, I want you to stick to the 28 major currency pairs. Maybe in the near future, you can add oil and gold, all right? But oil and gold are commodities. They are not currencies. So their trading is a bit different. So when it comes to oil and gold, they are commodities. They are not currencies. So their style of trading is a bit different. Their style of trading has to do with supply and demand. Gold and oil trading has to do with supply and demand. But currencies, there's already supply and there's already demand. People are exchanging currencies here and there every day. People are traveling and they exchange currencies. People are doing businesses, transacting businesses, and they use currency. So as for currencies, the supply and demand is always there. It's always available. So that doesn't work on supply and demand. Currency pairs doesn't really work on supply and demand. But crude oil and then gold has to come with supply and demand. Is that okay? So these are 2 different markets. Commodities are different market from forex currencies. When it comes to currencies, their market is a bit different from commodities. But once again, this is what I will say. Now, the second part of my answer is this. He said that he has heard other traders talking about just trading one currency pair. That is very true. I also know a trader, a very good friend of mine. She was actually part of my mentorship program, but now she's even doing well than me. Oh yes, that's the truth. She's actually trading very, very, very well. She's doing very well than me, although she was part of my mentorship program and then she took some of my courses, but her experience in the market now is so wonderful. Now, this lady I'm talking about, she trades just one currency pair. She trades just one. And the one currency pair she trades is GBP-JPY. GBP-JPY. That's what she trades. She doesn't trade any other pair apart from that pair, GBP-JPY. So according to her, that is the currency she's always good at. That's according to her. She's always good at GBP-JPY. So she has decided to stick with it alone and then do that alone. So I cannot say that the issue of trading one currency pair is bad. Okay. But if you are good at other currency pairs, in case you are even good at one currency pair, is it not possible you can be good at others? So that will be the question for you to answer. So for me, I will not suggest that you should trade one currency pair. And I will also not suggest that you should trade all the currency pairs. I mean, even the whole 28 currency pairs, I may not suggest that you should trade all of them. And then I may also not suggest that don't trade all of them. So the ball is in your own court to decide whether you want to trade all the 28 major currency pairs, even including the exotic pairs, or you want to stick with just a few of the currency pairs, or maybe just one. That will be your decision. So this will be my answer. So any which way, you are still doing forex trading. So that is good. All right. Now, let me come to the second question that Drino asked. So I'm taking you back to the slides for us to look at the second question that Drino asked. Now, the second question from Drino has to do with a promise I made in terms of pending orders. We have the buy and sell limit orders and then buy and sell stop orders. Now, that is what the continuation of this video will be. So quickly, we're going to look at pending orders. And under pending orders, we will look at the buy and sell limit and then the buy and sell stop. So we have type of forex orders, okay? In case you missed that, you may watch the part 12 video. In case you missed that part, we have the part 12 video. Just go to the playlist, Forex Trading for Beginners. That's the playlist on this channel. You'll find part 12 video on the channel. You can watch it. It will give you all the details about how to place a trade, how to buy or sell, and then the type of orders. And then after that, you can come and then continue from this video here. So aside the part 12 video, this is the continuation, all right? So already you know how to contact me in case of anything. So on Telegram at Kofi Dollar, email, and then phone number and WhatsApp. All the details are here already. So I won't waste my time on that. But Leading Forex, we are a community that we want you to be part of us. So we'll be happy if you can subscribe to our channel and then also hit the notification bell so that anytime we drop a new video, you will be able to have access to it. Please, when you watch our videos, you can like the video and leave us a comment. We'll appreciate that. Thank you very, very much. Now, let's refresh our memories a bit and then continue. Now, in the part 12 video, we said that there are two basic types of orders, and they are the market execution or the market orders. Under the market execution or market order, it is an ordinary instant order that you take. That is when you want to enter into the market instantly. That is what you use. We call that instant execution. So once you want to enter into the market instantly, then you can use market execution order or instant execution order. We'll soon go to the practical section on the MT4 so you can see all this for yourself. And then also, we also have the pending orders, which has to do with Drino's question. So the pending orders, there are two types of pending orders, okay? So what is a pending order? The word itself is self-explanatory, but let's explain it a bit. It says it's an order to be executed later at the price that you specify. So pending orders are orders to be executed later at a price that you specify. So you can specify that your trade should trigger that when the price gets to that level, or when the trade gets to that level, automatically your trade that is pending should trigger. It should enter into the market automatically on your behalf. Whether you are watching the trade or you are not watching it, whether you have closed the MT4 or your MT5, or you don't even have internet connection or whatsoever. Once you place a pending order and then the market gets to that level, it will trigger automatically and then take you live into the market. So that is what we call pending orders. So it's an order to be executed later at the price that you specify. So under this pending orders, we have two types. We have the limit orders and then the stop orders. So under the limit orders, we have the buy limits and then the sell limit. And then we also have under the stop orders, we have the buy stop and then the sell stop. Let me explain a bit about these stops and then take you straight to the MT for us to look at the practicals. All right. Now, when we say buy limit or sell limit, all we are saying is that, let's take the buy limit, for instance. The buy limit, all we are saying is that, assuming the trade is going up, okay? Now, there is a level that you are watching. There's a level here that you are watching, and you think that when this price, which is going up, gets to this level here, the price may reverse and come back down. All right. And then also we have another instance where the price is coming down. And then you believe that there's a level you are watching at the down there that you think once price get to that level, it will reverse and then go back up. Do you get it? So the level that you are watching, or the level that you are watching up there, once it gets there, you think it will reverse and come back down. These levels are what we call the buy limit or the sell limit. So the buy limit is when you think that the trade is coming down, it's on a sell coming down. I'm explaining the buy limit. So the price is coming down, the trend is a sell, but you are seeing a support level somewhere that you think that once the price comes down to reach that level, it will surely bounce and go back up. So at that level that you are watching, you can place a buy limit order at the bottom. That price, the price that you think that when the trade comes to that level, it will bounce and go up. You can place a pending order, which will be a buy limit order, of which when the price gets to that level, automatically it will trigger you into the markets, and then your trade will be live in the market. Now, the opposite of this is the sell limit. The sell limit is that the trade is coming from a sell perspective and it's going up. It's on a buy trend. It's on a buy trend. But you think that when it gets to a top level here, which is a resistant level, the price or the trade may reverse and go back down. So you can place a pending order at this price level that you are watching, which is a sell limit order. So with a sell limit order, when price gets to that level, it will trigger and then go back down. So the difference is this. Now watch this. You are anticipating that when price gets to this level, it will go back down. So once the trade gets to that price, it will trigger, and then your trade, which is pending, will now be live. Now, when the trade continues or it does what you say by reversing, then you start making profit. Okay? Because you are saying that at this level here, the price will reverse. So once it gets to that level, and then it takes your pending order into live order, and the trade is now live. When it indeed reverses, it means you'll be making profit. But if it gets to that price and then your trade is triggered and it doesn't reverse and it keeps on going up, it means you'll be in a loss. Do you understand? Yes. So when it gets to that level and it triggers your trade into the market and it doesn't reverse and it keeps going up, it means you'll be in loss. But once it triggers and it begins to reverse, it means you're in profit. The same way at the opposite level here. It is coming down to a support. You think that once it gets to that support, it will reverse. Once it gets to that level and it triggers your pending trade into live trade, and then it starts reversing, you'll be in profit. But if it doesn't happen like that, and then it triggers your trade into live trade, and then it keeps going down, it means you'll be making losses. Once it reverses, you make profit. But if it doesn't reverse and it keeps going down, it means you'll be making losses. Do you understand this? Thank you. Now, so that is buy limit and sell limit. So the illustration here is clear. The trade is coming down. There is a point you are watching, which is the green level here as support. So when the trade comes to hit that green level, it will take and bounce back up. So at this green level, you place your buy limit order. So you only look for the price at this level. And then the same is the sell limit. So the red level here is the resistance level. The price is coming up. You think that when it reaches that resistance level, it will bounce back and go back down. So you place your sell limit order at that price level. And once that happens, it means you make profit. But if it doesn't, and it triggers your trade and it continues going up, it means you are in loss. Are we good? Quickly, let's look at the other pending order before we go to the MT4. The next one I want us to talk about is the buy stop and sell stop. Now, buy stop and sell stop, the demonstration is very easy and simple, okay? Now, with a buy stop, the trade is going up. And you are thinking that when the trade gets to an up level here, it won't bounce off. But you are looking at that level as a level that when the price is able to reach there, you think that it will continue its way up. You get it? The price is coming from the down. And you are looking at a level that when the price breaks that level, there's a resistance level here. So when price reaches that level, you are sure that yes, once this level is reached, it will continue to make its way up. So if that is the case, you will place a buy stop order at that level so that when price reaches that level, it will trigger you into the market. So once it triggers you into the market, you are waiting for a continuation. So when the trade continues to go up, it means you'll be beginning to make profit, or you begin to make profit. But when the price reaches there and then it takes your pending order into live order, and then it doesn't continue up, but it starts reversing back down, it means you are going to be making losses. Do you get it? The opposite is the sell stop. Now, the trade is on its way down, and you think that there's a level. When price is able to break that level, it will continue its way down. So you place your sell stop level at that level. So your sell stop, you look at the price, then you input that price as a sell stop. So what it means is that when the trade comes down and then it reaches that level, your trade will automatically be triggered from pending to live. So it means your trade will now be live in the market. So when it continues its way down, it means you will be making profit. But if that doesn't happen, and then it triggers your trade live in the market, and then it starts reversing back up, it means you'll be making losses. This is what it means to say we are doing a buy stop or sell stop. Now, if you understand this perfectly, then we have to go straight to the MT4 and do the illustration. But before we do that, please subscribe to this YouTube channel and help us to grow this community, because it is you as a trader watching this video that can help the community to grow. So subscribe to the channel, hit the notification bell, leave a comment, at least click like or like the videos you are watching, and then help the community to grow by doing that. Once you begin to do this, you are helping the community to grow. Thank you for subscribing and hitting the notification bell, and also liking our videos and commenting. I appreciate that. Now, let's go straight to the MT4 and look at the whole tutorial that we just looked at. Good. Now, we talked about buy orders, which has to do buy limit and then sell limit. And we also talked about buy stop and then sell stop. So let's look at buy limit first and sell limit. Let's look at the limit ones first. And just as the note rightly said, so let's assume this is Euro chef. Let's assume that we are anticipating that when price get to a level, let me get a line. Let's assume that we are anticipating that when price gets to this level here, okay, the level of the red line here, we're anticipating that when price gets to this level, the trade will begin to reverse and go back up, okay? So let's look at the price that we are anticipating. That price is what price? Let's write that price down. That price is 1.04119. So we're anticipating that when the price reaches this red line level, the price will bounce off and begin to go up. So if that is the case, we will have to place a buy limit order. A buy limit order. So this is the price we are going to use to place the buy limit order. Okay. So how do we do that? So we double click on that pair in case you want to trade. All you need to do is double click on the pair that you want to trade. So Euro chef, you double click on Euro chef. it will pop up like this. Once it pops up like this, I want to bring it down here so that the price wouldn't conflict us. Let's assume, what lot size do you want to use? You already know your lot size. Let's say we want to use 0.01, okay? Now 0.01. And then the type of market you want to place is here. So the type of market, we are not trying to do market execution. Market execution means instant. You are entering into the market live at once. We don't want to do that. We want to put a pending order. So you click at that option, you see market execution and then pending order. So you click on the pending order. Once you click on pending order, you see another drop-down menu, which talks about the type of pending order you want to do. So when you click on it, you see the options are there. We have buy limit, sell limit, buy stop, and then sell stop. So we want to do buy limit, okay? So we click on buy limit. Once you click on buy limit, they will ask you that at what price do you want to do this buy limit? At what price? So we input the price there. Do you remember the price? Yes, I remember the price. The price is 1.04119. So this is the price that we want to do that buy limit order. Now, there is also another option here. Supposing you have a date that you are thinking that it will take the trade to get there. You can set that date. That assuming you are thinking that by the close of tomorrow, if the trade doesn't get there, the pending order should be automatically closed. It shouldn't be active again. The pending order shouldn't be active. If you have that option, that is where you choose the expiry. Which date do you think you want this pending order to expire in case the trade never gets to this pending level? So that one you click and choose which date you want, all right? So you can choose the date you want this trade to expire in case the market doesn't reach that level. You can choose that. If you have an idea about that, you can choose that. But since we don't want to do that for now, we just tick there and then we can place our trade. Now, once you input the price over here, you can input the trade by clicking on place. So we click on place. The trade has been placed. Now let's remove this line, this red line that is here. Let's delete it and see. So you see, your pending order has been placed. And if you watch it, you will see buy limit at the end here. Buy limit with a lot size of 0.01. So it means when you look at the down here, the trade is only pending. The price hasn't reached there. So it is not, you are not live in the market yet. So you see that there's nothing happening here. So this trade will be waiting until the price finally gets here. Once the price gets here, it will trigger this trade into live. So the trade will now be live in the market. And then the live trade can begin to take place. All right. So you see, it will be indicating if the price is getting closer. You see, it's indicating green here. It means the price is getting closer to my buy limit. So once it's getting closer, it will be showing you a green line like this or a green signal. But once it gets there, then automatically it will enter into the market. Now, remember that once I have placed this pending order, if I did not set an expiry date for it, and then I leave it like this, and then I go out of data or I go out of internet, or my phone even goes off or my laptop goes off and I don't switch to the MT4 to check, even if it is 100 years, once the trade gets to this level, it will trigger and then automatically it will start working. Yes. So once the pending order is triggered, it doesn't need data or it doesn't need anything to trigger. It is automatic. Whether you have checked on the trade or not, Once it gets there, it will trigger. Unless it doesn't get there. When the price don't get here, then that one fine. It will still be lying down as pending. But if you set an expiry date for it and it takes 2-3 days, and then maybe your expiry date is in 3 days time. So if in 3 days time, this market doesn't come to this level, the pending order will automatically be closed. It means it will no more be active. And then also you can also close your pending order manually. If you think this pending order you've put in here is a mistake or it's no more going to be effective, you can just close it. Once you close it, it is not going to have any effect on your account because it hasn't been live. The trade was only pending. So even if you close it, it doesn't affect you in any way. I have just closed it. It doesn't have any effect on your account balance. It doesn't give you any negative or whatsoever, nothing, because the trade was only pending. It didn't go live. So you have no cause to worry. Is that okay? So any of the orders you want to do, you already know what they mean. So if you click on it, you come here, you click on pending order, and then we have the limits. We have sell limit. If it is sell limit you want to do, you input the price of the sell limit. So let's assume that you are thinking that when price gets to this level, where the line is, when price comes back and reaches this level, it will go back down again. That one is going to be what we call a sell limit order. So once price gets here, you put your sell limit order. So you double click, you come to market execution, you choose pending order, then you select sell limit. So you input that price. That price is 1.04430. Now, sometimes if you don't input this price level correctly, you will place the order and it won't place. Once you click on place the order and it is not responding, then it means that your figures, your price you are inputting here is wrong. It means the figure is wrong. Or you chose a different limit. You chose a wrong limit. If you choose a wrong limit, for instance, this is a sell limit. If I choose to say it is a buy limit and I place this trade, it won't place. You see, they are telling me it's invalid because the trade has already come down below this price. So if I'm saying that when price gets to this level, it will go up. Already price is below that price. So it will be invalid. So if you choose a wrong pending order, you will get the same instruction. They will tell you your order is invalid. So you may have to be very careful in terms of choosing this buy stop and the rest. So if I choose a buy stop, it means when price gets here, it will continue its way up. So here they are telling me the price I have chosen is wrong. So I may have to use sell. You see that it's still also wrong. So if you choose a wrong sell stop or buy stop, this is what will be happening. All right. This is what will be happening. So you need to be very careful and know what you are choosing. Choose the right pending order, and then the market will always do what? Trigger. Is that okay? Thank you. So in detail, this is what you can do by setting up your order. All right. Let's assume this order here is going to be our buy stop. Pending order, buy stop. We are not doing buy limit. We want to do buy stop. So let's input the figures. So 1.04430. Then in case you have any expiry date for it, fine. But in case you don't have, you can place your trade. Now the trade has been triggered. So this trade here, what it means is that what we are saying here is that once the price gets to this level that we have entered, so this is the level. Once this price comes back up to this level, it will continue its way up. So that is the buy stop. So the buy stop order has been placed down here and it is pending. So nothing is happening on the account. So in case I decide that this trade, the way it is going down, maybe it won't come back up to this level. So it's no more active or it's no more needed. Then you can just close it. Then you close it. it will have no effect on your account or whatsoever. Not at all, because the trade didn't trigger. It didn't go into the market live. So you have no cause to worry. Is that okay? So this is how you can put up your pending orders or place your pending orders. I want you to give it a try. There are people who love that strategy. There are others who also think that, hey, let me do this instantly. I want to just do my own thing instantly. There are people who may not be having time watching the chat every minute, every second. So they'll put pending orders and then they go about their normal duties. Once the trade gets there, it will trigger. So again, let's not forget, let me add this quickly. When you set up a pending order, you can input the take profit and stop loss, everything at once. So when you put, for instance, buy limit order, and you input the price, you can put in your stop loss and take profit. Everything is here. You can input your stop loss and take profit over here. So once you input that and you place the trade and you are still not there, once the trade is triggered and then it gets to the take profit that you have set, it will close the trade automatically for you. All right. So you can set your stop loss, and then also you can also set your TP for that pending trade. So you put everything on pending with a stop loss, with a take profit, and then you take your order. Once the trade gets there, everything gets into the market live. Your stop loss, your take profit, everything is triggered. And then once the trade gets to your take profit, it will automatically close it for you. Once it gets to your stop loss, it will hit the stop loss and then close automatically with the loss. So all these things can be done. All right. That is that. And you can always edit your pending orders. In case the price that you selected, you still feel you want to correct it. Maybe it is not the accurate price that you need. So you can go back and edit your pending order. You can edit it to suit whatever you want to do. Okay, you can edit it always. So once you input some figures and you have a change of mind on that, you can input and then modify it and make your changes. All you need to do is just do the modification. And in case you don't know how to modify a trade, then you have to watch the part 12 of my tutorial. In that part 12 video, I talked about how you can modify a trade. So you can look at that and use that to do your modification of the trades, and then you'll be good to go. All right. Once again, my name is Kofi, your admin for this channel. Thank you for doing the watching, and thank you for the questions that are coming on the channel. If you also have a question, please leave it on the channel. I'll take my time, read it, and then I'll make a video to answer your question for you. I'll see you in another video. Until then, please take very good care of yourself. And then remember, you always need to be alive. So take care and be good. I'll see you in a new video.